Joining us right now with more on NVIDIA's bull run is Ben Reitzes. He is Melius Research, head of technology research. Ben, you say that when you reiterate your buy rating on this, you get a lot of eye rolls. What do you tell the skeptics who are doubters?
Well, this is like when Apple did the iPhone, and if you gave up on Apple in year 2 or 3 of the iPhone, you missed a lot. So this is really in the beginning. And what people, really are skeptical about is the size. And they're already a huge market cap here, but there's still room to go. And obviously, Jensen running around New York meeting investors all over the East Coast, he's got a lot of good things to say. I think that you should listen to him.
Jensen Huang truly has lots of good things to say. But of course, there are lots of skeptics. And it's funny how every revolutionary company seems to have a front row of naysayers, popcorn in hand, waiting for the fall. Ben's response is golden, though. He tries to compare this moment for NVIDIA to the early days of the iPhone. Remember when everyone thought smartphones were a fad, and now we can't live without them? Same thing here. NVIDIA's story is just getting started, and if you bail now, you might end up like the person who sold their Apple shares right before the iPhone went mainstream, sitting at home watching everyone else's portfolios balloon. Jensen Huang, the charismatic CEO, is practically living on airplanes, meeting investors all over the place. The man's on a mission, and when he's hustling this hard, it's like your favorite action movie where the hero is running full speed toward the finish line, not breaking a sweat. So skeptics, beware. This is just the opening act for what could be NVIDIA's biggest show yet.
NVIDIA, you actually say, is your second cheapest stock in your group. How do you look at it on a PE basis?
Well, I look at PE to growth, and there's a ton of upside next year to our growth estimate, and revenues of 40%, but there's upside there, and there's probably not as much upside in any other stock. So I think it's trading at about 1x PE to growth for next year. And that's really attractive for a name like this, as long as the numbers are there. And if obviously if the direction is upwards to the estimates, that's really attractive still. And I think that each day you got to walk in and say, what are our checks showing us? What is the research showing us from the bottoms up? And it's still there.
Wait a minute. Did someone just say NVIDIA is cheap? I know. It sounds like we've entered an alternate reality where Ferraris are sold at used car prices. But Ben's got a point here. On a PE to growth basis, NVIDIA is like the diamond in the rough that everyone thinks is already fully priced. But it's sitting on a gold mine of future growth. And let's talk about that 40% revenue growth estimate. That's not just good, it's exceptional. It's like having a money tree in your backyard that you didn't even realize could grow taller. But here's the kicker. It's not just 40%. There's more upside here. Imagine unwrapping a birthday present, only to find out there's another present hidden inside. You think you've seen the best of NVIDIA? Nope. They're just setting the stage for even bigger gains. Every day, analysts are busy checking, double-checking, and even triple-checking their numbers because this stock has the potential to blow past expectations. So, if you're an investor looking at this, don't just walk, run. The PE to growth ratio here is the kind of deal you don't come across often.
Demand for Blackwell, what are you seeing in your channel checks at that point?
It's pretty huge. What the big issue was whether they could get the production up and running and get through their mask issue, and they seem to have done that. And whether they can get through the negative mix shift of scaling a new product, and I think they're going to do that pretty well within a couple quarters. And the demand looks really insane, like you said. These big clouds, you got to understand, these are huge capitalized companies, and if they're going to beat their cloud numbers that they're going to show the street, meaning Microsoft, Google, Amazon, they got to buy Blackwell, and they got to get the customers up and running, or else they're not going to beat numbers. And that's it. That's how you get the sequential acceleration to their cloud business. The companies will say a lot of different things that, it's because of how great they are in cloud, but really it's because investors run to their platform to use the latest and greatest from NVIDIA. And that's how they're going to beat, and they're going to buy a ton. And pretty excited.
Here's where things get wild. The demand for NVIDIA's Blackwell chips isn't just big, it's massive. Like Black Friday meets Cyber Monday massive. Imagine people lining up around the block, not for a new gaming console, but for cutting-edge AI chips. It's not just the tech geeks anymore. Big names like your Microsoft, Google, and Amazon are clamoring to get their hands on these chips. But, as with any massive rush, production becomes the bottleneck. Think of it like trying to pour an entire ocean through a garden hose. That's NVIDIA's current challenge, scaling up fast enough to meet this insane demand. Ben is right, though. Give them a couple of quarters, and they'll have it all figured out. Once they smooth out the production issues, those chips will be flying out of factories faster than concert tickets for a Chris Brown show. And let's not forget, these are no ordinary buyers. When companies like Microsoft and Amazon are saying, "Yeah, we need those Blackwell chips ASAP," you know you're dealing with a serious market. They're going to be snapping up these chips like hotcakes because NVIDIA's tech is their secret sauce for beating cloud computing competition. Once the chips are flowing, expect some serious fireworks in NVIDIA's sales numbers.
What about their gross margins? There has been some concern recently about whether they could keep up the gross margins or whether they're continue to drop a little. And this is, again, from very high levels.
Yeah, I mean, that was our main concern as well. And whenever you launch a new product, and make changes to it, you have to, you even write off some older inventory or inventory that's no longer useful. They had a larger write-off than usual last quarter, but we think that's going to get less and less as we go through. And what we're seeing is them moving past that gross margin issue. So what should happen is gross margins go down a little bit for a quarter or two and then turn. We see gross margins in the mid-70s, which can power close to $5 in earnings power, that they can demonstrate over the next 4 to 6 quarters.
The gross margin question, the one that keeps analysts up at night. They say gross margins are like the lifeblood of any tech company. When they go down, people panic like their favorite sports team just lost the championship. But Ben is here to calm everyone down. Yes, NVIDIA had a bit of a stumble with their margins recently, but that's normal when you're rolling out new products and scaling up production. They had to write off some older inventory, which is like cleaning out your closet after a big shopping spree. Sure, it hurts a little, but once it's done, you've got room for all the shiny new stuff. I too predict those margins will definitely bounce back. And before you know it, we'll be looking at mid-70s margins again. It's kind of like going through a tough diet. You drop a few pounds, but after a while, you settle into a nice, comfortable weight. Once NVIDIA gets past this little hiccup, those margins are going to look strong again. So for the nervous investors out there, just think of this as NVIDIA's recovery phase before they hit peak performance once again.
The stock was down about 2% in the calendar third quarter. What about the fourth quarter? What makes you think that this is going to be the time that things really turn around?
Well, I think that the street this time, so last year as well, third quarter is a tough time for semis anyway. And for NVIDIA, they tend to do the market tends to really hype things up in the first half and then digest it in the second half. And this year, a lot like last year, what happens around this time is folks start to say, yeah, I know next year is great, but what about the year after, meaning 26? And I think the street this year is going to discount a little quicker that things are okay. They have that huge show in March called GTC, and we think they'll unveil the Rubin chip for 2026 there. They've already talked about it, but we'll hear more about it. And then you'll realize, oh yeah, 2026 is a growth year, and it's a pretty big one. And the market probably discounts that a little sooner than they did last year because Jensen is obviously gaining more and more credibility, which is obvious.
The dreaded Q3 slump. It's like the end of summer when the energy fades, and everyone starts thinking about the cold winter ahead. NVIDIA's stock down 2%? Not exactly a crisis, but still enough to make investors scratch their heads. But here's the thing. NVIDIA always has a big comeback in store. Think of it like a boxing match. Sometimes you take a few hits in the middle rounds, but you know the knockout punch is coming. If you've come this far in the video, congratulations! You're officially smarter than the average bear. So, while you're here, go ahead and hit that like button, subscribe, drop a comment, and share. Let's spread the knowledge. Because sharing is caring. And also, algorithms love it. Okay, let's talk about Q4. This is where things start to get spicy again. Ben's right. The hype train slows down in the second half, but NVIDIA's got some serious cards up their sleeve. March's GTC conference is the Super Bowl of tech conferences, and you better believe NVIDIA's going to drop some bombshells about 2026 and beyond. They've already teased their Rubin Chin chip, and if history repeats itself, the market's going to lose its collective mind once we hear more. So, if you're an investor feeling a little queasy about the recent stock dip, just hold tight. Q4 is when things turn around, and 2026? That's shaping up to be a monster year for NVIDIA. Trust me, you don't want to be left out of this one. As we conclude, it is worth mentioning that NVIDIA isn't just a tech company. It's a freight train, and it's not slowing down anytime soon. Whether it's their Blackwell chips, their bounce-back margins, or their unstoppable revenue growth, there's a lot to be excited about. Sure, there are bumps in the road, but that's just par for the course when you're talking about an industry leader like this. So, to all the investors watching, don't sleep on NVIDIA. This ride is only just beginning. Just because the profits look massive doesn't mean it's all smooth sailing for investors. Sure, it sounds like these companies are on the path to AI world domination, but competition is fierce, tech evolves quickly, and markets can be unpredictable. If you're thinking of investing in AI, remember, past performance is no guarantee of future results. Even the biggest giants can stumble. And while OpenAI or XAI might be the next trillion-dollar company, nothing in investing is ever guaranteed. So, here's the disclaimer. Please do your own research. Understand the risks. Get familiar with the companies, their tech, their competitors, and the broader economic conditions. AI is exciting, no doubt, but smart investors know that it's about making informed, wise decisions.